All right, so today we're going to be talking about foreclosures because I have a few clients that are just waiting for that perfect opportunity to purchase a home, but they want it at 50% off or 30% off or 20% off through a foreclosure. So I have a new report that came out by Adam. This report was done by Adam, Attom, and they do a lot of statistics and metrics in the real estate industry nationwide. And it talks about where we're at with the foreclosure market. So the bad headline reads something along the lines of 28% increase, 34% increase. But what does it all truly mean? Does that mean we have plenty of foreclosures? Let's talk about it. But first of all, where am I? I'm in Bradenton, Florida right now. I am at the Rossi Waterfront Park. This is the Bradenton Riverwalk. And take a look at this. This is the Braden River right here. This place is beautiful, and this walk goes quite a while. It also goes down this way here, and there is a park. Really nice place, to bring your kids. There's an amphitheater. It's pretty neat. So let's talk about it. What do we have going on with the real estate market foreclosures? Hey, real quick, I know I'm an agent, but a lot of people like to sell for sale by owner. So if you're interested in learning about a course that can help you sell your property for sale by owner and do everything an agent does, then please click the link below. There's a little place where you can sign up and I'll send you all the information. So here's what's up. This report says that we are up quite a bit with foreclosures. The first thing to pay attention to that they're going to say is that we are up 28% more foreclosures in quarter 3 of 2023 than we were of quarter 2. And sure, that's a fact. And then the next thing they're going to say that is a little fear-mongering is that we are up 34% from year over year. And I think that's from quarter, year over year. And is this alarming? And the answer is no. No, it's not alarming. And if you're a buyer, this ain't nothing yet. This is nothing, because take a look at this chart that they provided. This chart here shows that we are so low in foreclosures. This goes all the way back to 2005. And in 2005, we did have slight amount of foreclosures, but it was also a hectic time to buy real estate. So stuff was going up in 2003, 4, and 5. People were selling. They were not getting foreclosed. And we just went through a very similar time frame in 2020, 2021, and 2022. Now, if you look at these levels, they do say that we have just slightly under 125,000 foreclosures. And that's not finalized foreclosures. Those are the ones that get the list pendants for non-payment, that are going through the process, getting foreclosed on, and actually foreclosed. Now that's nationwide. It's a very small number, because if you look at the chart again, you'll see that we are at pre-pandemic levels. So what's important to note about the pandemic? How did the pandemic affect it? And once again, look at the chart. Things went down significantly. The number of foreclosures we had got greatly reduced, because what happened were two things. First thing that happened, actually three things. First thing that happened is that we had lower interest rates. So some people refinanced and they were able to lower their payment to an affordable level, and no problem. The foreclosure process got paid off and they're back on track. The second thing that happened was that people lost jobs, right? There was a problem during the pandemic. People lost their jobs, they lost their livelihood, their business went down, whatever happened, and then they stopped paying. But the federal government said, hey, banks, you're not allowed to foreclose on anyone. So that's why we have this giant dip here. This giant dip represents that no foreclosures were allowed to happen. So how do you expect the levels to stay high if the government says you're not allowed to do them? So this dip that you see is actually a false dip, because for I think 18 months, no foreclosures were allowed to happen. And the third thing that happened is that the values of the properties went up greatly. And since they went up, a lot of people that were in foreclosure and had a problem ended up selling. They just solved their problem by listing the property. They got over asking full price or over asking cash buyers buying this stuff up. And this happened for 2 years straight. The exact same time frame where they were allowed, where the banks were not allowed to actually foreclose on them. So I'll say this, if you're a buyer who's excited about having a foreclosure opportunity, the first thing I'll say is most likely not. And that's because we are just at pre-pandemic levels. And what was the market like pre-pandemic? It was in a state of equilibrium, at least where I live in Sarasota, Florida. We had this situation where finally, just finally, we had the supply and demand be almost equal. It was always a market that didn't have enough homes for many years. There weren't enough buyers, but interest rates finally motivated some people, and we were just getting to that equilibrium point. And then the pandemic hit, and when that happened, the rates dropped, everyone went crazy buying, and inventory dropped to record level lows. So if you're one of those buyers that's wanting a foreclosure because you think there's all these foreclosures out there and not many buyers out there, this is not true. There are plenty of buyers, especially the institutional buyers who are acquiring things because they don't want to pay full price. They're going to go and make a deal directly with these banks and pick them up even before they hit the market. Now in this article, they even say this. This is the CEO, which is Rob Barber of Adam, which is the company who's doing all these reports. And I'm reading here. Here's what he said. He said, foreclosures are on the rise again this quarter, as indicated by our latest foreclosure numbers. The number of new cases filed by lenders in the third quarter did rise just a small amount. See, they're making it sound a lot worse with the headline, but the reality is they went up just by a small amount. And then from the same period last year, and actually dipped a bit quarterly. So once again, as you can tell, headlines are not the way to go and get your news. You want to go dig deep into the article. So as you zoom out and you look at the last 18 years of this chart, you'll see that we're actually at record lows. Aside from the pandemic, where we weren't allowed to do foreclosures, the number of foreclosures we have are at record low levels. Now, if you're curious, where are all these foreclosures? They are not in Florida. A lot of people think that they're all in Florida because everyone has a second home here and so on. But let me tell you the top 3 areas that have the highest foreclosure starts. Now that just means that the lis pendens was filed in the courts and they have begun the process of foreclosure. First one is New York, and New York did have unbelievable appreciation. Next one is Chicago. Third one, Houston, Texas. So these are the 3 places that had the most amount of new foreclosure starts. That means people are falling behind on their payments in those 3 metropolitan areas. Now take a look at this. This is the amphitheater here at the Bradenton riverfront. And we have 3 or 4 layers here, and then a stage, a raised stage right here with a beautiful water background over here. Okay, now take a look at this next chart that I'm showing you. This one here is the US foreclosure starts, not the total foreclosures, but just how many are being started. And once again, we are at these super low levels. They're finally just catching up to the levels when they lifted the foreclosure moratorium and they did not allow foreclosures. When that got lifted, a whole bunch hit the market, a whole bunch of foreclosures. Well, we're finally catching up to that number, which is way lower than statistical averages have been for the last 20 years. But the next metric we should look at is going to be about the highest foreclosure rate. And the way this is measured is per capita, right? Per household. How many people are getting foreclosed on, or the process of foreclosure is beginning. And here's the top 3. Okay, so now we're going to look at the places that have the highest foreclosure rate. This is not the highest foreclosure starts. This is the actual foreclosure rate. So first one here is going to be Houston. 1 out of every 371 rental units. Now this is really bad. if you know 371 people, know that one of those people is going through a foreclosure. Second is going to be Atlantic City, New Jersey, 1 out of every 453. Then Cleveland, Ohio, 1 out of every 459. Bakersfield, California, 1 out of 465. And last one is Columbia, South Carolina, 1 out of every 503. So this shows you that these are the areas that are going through a problem situation where people are not able to pay for whatever reason. Maybe they got in over their head, maybe they offered too much over asking, and I do know California had a lot of that going on, so I could probably explain that one. But Houston also had a lot of that. People were offering way above asking price, so that's probably another one of those reasons. But the rest of them, I'm just not sure. I'm not familiar with those markets. And now, since this channel is called Florida Real Estate TV, you may be wondering, what about Florida? Where is that coming in at? And Florida is 1 out of every 827 properties are going into foreclosure. Okay, in case you're a data-driven person like myself and you want to see this article, I'm going to link this article at the bottom in the description. But let me just talk a little bit more about what you can expect for the real estate market and the foreclosure market and what to pay attention to if you're one of those buyers that wants to get a foreclosure. And I picked up a lot of foreclosures during the last economic recession. Here's what you need to pay attention to. First of all, you want to see foreclosure rates to back when we had it last time, not the pre-pandemic levels, which are just a normal balanced market. You want to look at the foreclosure rates of 2007, 8, 9, and 10, but really 7, 8, 9. Those foreclosure rates were really high, and a lot of that inventory kind of came out in 2010 and 2011, which basically means that those were the best deals out there. Now, the problem that you may experience is that if you're a financed buyer, if you need to get a loan, forget about it. What usually happens is that they tighten the money supply. So they don't have any loans to give you, right? They kind of say, hey, everything's going down, we're gonna tighten up our portfolio, and we're not going to lend money to people with a 700 credit score. They just want the top people, or the 50% down type of people. So the money supply might get tightened, and when that happens, it's really difficult to get a loan, regardless of the underwriting guidelines that you actually do qualify for in the debt to income ratios. So here's another thing that you can pay attention to if you're really looking for one of these opportunities to get. What I really recommend is, in the meantime, stack your cash as much as you can, because the 10 or 20% down loans might be different by the time that kind of crash happens. And I don't mean crash like it's not, I don't see it as a crash. It's just a serious adjustment, Crash is like 80%, and I don't think we're gonna see that, right? I can't predict the future, but I'm pretty sure I'm right about that. We're just gonna have some declines. And a lot of people are sitting on super low interest rates. So they don't wanna, sometimes you have to sell your house in order to buy the next one. And you don't wanna sell and give up your 3% interest rate or 4 or 5% interest rate when today it's 8, right? You don't wanna sell that. Well, do you think the interest rates are gonna be lower when there's more foreclosures out there? The answer is no. They will be much higher. They will be double what we are today when we have crazy amounts of foreclosures, if we have a non-tight money supply. What I mean by that is, if the banks are lending, then they're going to be lending at really high interest rates if there's a lot of opportunities out there. But if the banks are not lending, then maybe the interest rates will be lower, but they're not lending, so good luck. You just have to find cash somewhere or another to buy those properties. And that is a great strategy, is start looking for alternative means of getting money. Sometimes people do home equity lines of credit right now, and then you hold that home equity line of credit, you use it just a little bit, and you'll have cash available in case some crazy opportunity comes up. But if you go back to the recession, you had a home equity line of credit and it got closed. They just closed it. They let you open it, and then 5 months later, it's no longer available for you. Why? Because the money supply tightened. So this could happen. Don't think that just because you got a home equity line of credit that they're going to keep it open for you. You know, once you hit a certain level of a balance with it, and the economy changes, they might just go and shut it down completely, and then you're back to basics where you can't get the loan and you don't have the cash to buy it outright. So now let's prepare, okay? If you want to buy a foreclosure, stack your cash, keep your credit score super high, and keep your job. Because if they do have money to lend, don't be afraid of the 10-15% interest rate. When the rates are high, inventory will be high, prices will get adjusted. And even if they don't go down too much, when those rates drop, no matter what the price is, prices are going to go up, because a lot of people sitting on the sidelines are going to make a move. They're going to pull the trigger, make a move, and buy investment property, buy regular property, and whatever they feel like doing. There will be a lot more competition at that point in time. And as a last little tidbit, let's talk about you sellers out there. So what to expect, you know, if you're a seller? Well, first of all, I don't think we're going to have major increase in foreclosures in the next 2 years. We're going to have some increases as people are, you know, losing jobs, which is happening very slowly, and the new job openings are mostly service industry. Some people are going to have to downgrade to their, you know, their jobs. So some people might need to sell at a lower price, and some people are actually going to lose their home, which will finalize a foreclosure. However, this is a long game. You know, the recession didn't happen over 1 year. When Bear Stearns fell and started the collapse, things were in a position where kind of we are right now. Very similar, you know, very few home buyers out there, not that many sellers, and basically it was just moving slowly. So if you're a seller and you need to sell in the next 3-4 years, you know, I would suggest you really consider selling, and make the move now, because this 8% interest rate might be a blessing in the long run. Now, I don't know the future. I really don't know what it'll be. I would invest accordingly if I would. However, you know, if you're in a position where you know you're going to have to move in the next year, 2, or even 6 months to a year, then I wouldn't wait, because, you know, with what's brewing, with wars and everything, I'm seeing this to possibly become a problem. Now, if you're looking for a home, should you wait to buy? Well, once again, I'm going to say no, because you probably want to buy and lock in that 8% interest rate. Even if prices fall a little bit, I mean, your alternative is to pay, you know, pay for a rental, and that's just making the landlords rich, not yourself. So take some action, do something, and if you have questions, write some comments below. I do appreciate you watching and sharing this video.